Because we all know Austin has a shortage of housing that's affordable, but a new report is showing just how bad the situation is and how it's impacting some groups worse than others.
In Texas, houses are disappearing, but no one is buying them. Entire neighborhoods are lined with for sale signs, yet homes sit empty for months. It doesn't make sense. The population is booming, construction is underway, money is flowing, and still, something is wrong. Something the numbers alone won't reveal. Consider this. In December, nearly 3,000 homes in Houston didn't sell. In Austin, prices dropped 2% month over month, while Dallas-Fort Worth homes linger on the market 43 days on average, the longest stretch in 5 years. These aren't small fluctuations. These are cracks in a market millions depend on. Why are some homes snapped up in days while others rot on the market? Some blame mortgage rates. Others whisper about oil and energy volatility. But the full story is buried in a web of hidden patterns, unseen forces, and decisions even seasoned investors can't predict. Imagine making a purchase, confident in your choice, only to discover the ground beneath your investment shifting beneath you. Silently, steadily. The answer isn't simple, and it's not something agents or news outlets will tell you. You'll see the numbers no one highlights. Hear the stories they never share. Are these homes waiting for buyers? Or is something else waiting for them? The first thing to understand is that Texas isn't uniform. While headlines say the housing market is booming, the reality on the ground tells a different story. In Dallas-Fort Worth, homes priced under $300,000 are selling faster than ever. But anything above that lingers. In Houston, some luxury properties over $1 million are sitting for months, untouched. In Austin, even mid-range homes fluctuate unpredictably. Demand one week, stagnation the next. Why does this happen? Numbers alone don't explain it, but patterns begin to emerge when you look closer. Consider inventory statewide. Texas has about 78,000 homes for sale, the highest in 5 years. Yet despite this surge, median prices in Dallas-Fort Worth are still at $470,000 and Austin at $585,000. Conventional wisdom says more inventory should lower prices. But here, the opposite is true in pockets. Something is disturbing the normal flow of supply and demand. And it's not just price. Average days on market tell another story. In Houston, homes are staying listed 43 days on average, a 12% increase from last year. Yet in smaller suburbs, properties vanish within a week. Even seasoned agents admit, some days it feels like the city decides which homes sell and which don't. Let's dig deeper. Texas is an oil-driven state, and the ripple effect is everywhere. With oil revenue contributing $27 billion in taxes and royalties in 2025 alone, funding infrastructure, schools, and municipal budgets that quietly bolster property values, while fluctuations in energy prices, something subscribers are already tracking in real time, subtly alter buyer confidence, where even a $0.20 swing in gasoline can delay purchasing decisions for thousands of families. Psychological, financial, and silent. So stay subscribed. Imagine walking into a house you've dreamed about for years. It's perfect. The price seems fair. Yet something feels off. Not the layout, not the paint, but the market itself. Agents call it ghost demand. Interest exists, yet action stalls. The house waits, the buyer hesitates, and the clock ticks. Data backs this up. In December 2025, 2,900 homes in Houston remained unsold, compared to 3,300 the previous year. Austin saw a 2% month-over-month price drop, while luxury inventory in Dallas-Fort Worth rose 18%. Even mortgage delinquency is creeping, 2.4% statewide, highest in nearly a decade. Every figure points to subtle instability. The market isn't collapsing, but it's no longer predictable. Why do some homes sell instantly while others sit? To understand, look at migration. Texas is still attracting families and investors, but preferences are shifting. Smaller towns near major metros, places like Sulphur Springs or Tyler, are suddenly hot. Buyers are chasing affordability, but developers and municipal planning haven't caught up. The result: oversupply in some areas, extreme scarcity in others. It's a push-pull that creates tension, both for the market and for potential homeowners. Now consider interest rates. A 30-year mortgage averaging 7.1% isn't catastrophic, but it changes the math for middle-income buyers. Families who thought they could afford a $400,000 home are now calculating whether that same home might cost $50,000 more over the life of the loan. And when multiple families hesitate at once, the ripple effect magnifies. A single stalled purchase can influence dozens of surrounding listings, creating micro-dead zones in the market. Another layer: speculative behavior. Investors monitoring rental yields are shifting funds from city apartments to suburban single-family homes. This inflow can inflate prices artificially, but it also creates instability. Neighborhoods that appear hot may suddenly stagnate when investor priorities shift. Let's pause for a moment. Take a look at this. 112,000 construction permits were filed in 2025, up 8% year over year. 29% of homes sold were priced under $300,000. Luxury homes above $1, inventory up 18%. Average household income, $74,000, while the median home price is $470,000. Look at the gap. Affordability is strained. Buyers hesitate. Homes sit. Yet in some areas, frenzy persists. This contrast creates tension, a psychological push and pull that keeps the market moving unpredictably. But for now, consider this. Even with numbers, statistics, and all the logic in the world, there's a hidden layer influencing every decision. Something you can't see, but can feel. Now that we've seen the numbers, the patterns, and the hesitation in the market, it's time to dig deeper. Because the real story isn't just supply and demand. It's the interplay between human psychology, economic forces, and unseen pressures shaping every Texas neighborhood. Start with energy. Texas isn't just any state. It's the heart of oil and gas. The revenue from 2025 alone, $27 billion in taxes and royalties, flows directly into local infrastructure, schools, and public services. On paper, this should stabilize property values, and yet energy volatility creates micro-fears that ripple across the market. One week, a refinery announces maintenance delays. The next, gasoline prices jump 25 cents per gallon. It doesn't seem like much, but buyers see it as a signal. Should I wait? Should I act? That hesitation creates bubbles of frozen demand. Consider mortgage rates. At 7.1% for a 30-year loan, buyers pause. A family calculating their monthly payment sees a gap between what they can afford and what the market demands. Suddenly, homes priced at $400,000 or $500,000 feel out of reach. But here's the twist. In smaller towns, prices are rising precisely because buyers are shifting in search of affordability. The demand migration is invisible on citywide averages. It's fragmented, unpredictable, and psychological. Imagine a couple visiting their dream home. It ticks every box, but the for sale sign has been up for 60 days. They pause. If no one else has bought it, why not wait? That tiny hesitation, multiplied by thousands, reshapes the market. And then there's speculation. Investors are moving aggressively. Luxury homes in Dallas-Fort Worth show 18% higher inventory, not because demand is weak, but because investors are flipping, holding, and delaying sales to maximize return. This creates a peculiar paradox. Homes that should sell quickly sit stagnant, while affordable homes disappear overnight. Look closer at inventory across Texas. 78,000 homes for sale statewide, the highest in 5 years. Average days on market, 43, up 12% from last year. Homes under $300,000, 29% of sales, but still often priced above what buyers can comfortably afford. Foreclosures in Houston, 1,200 filings, Small but significant signals of stress. Now, shift to the bigger picture. Texas housing isn't just about individual decisions, it's about collective behavior. Cities like Austin and Dallas-Fort Worth are population magnets, attracting migrants from California, other states, even overseas. But as the cost of living rises faster than incomes, median household income is $74,000. Median Dallas home, $470,000. Many are pushed towards secondary markets, Tyler, Sulphur Springs, smaller suburban towns. Developers rush to build, investors speculate, and suddenly what seems like a stable market is fractured into hot and cold zones. Here's the paradox. The Texas housing market is simultaneously alive and haunted. Alive, because money, population, and construction fuel growth. Haunted, because subtle forces, interest rates, energy shifts, buyer psychology, create uncertainty that slows transactions and inflates fear. And fear itself shapes value. By now, you might see the truth. The market is not purely financial. It's psychological. Every unsold home, every hesitant buyer, every fluctuating price carries a story. The why isn't just numbers, it's perception, movement, and timing. Final information burst before closing. Homes sold in December 2025. Houston 2,900, down 12% YoY. Average home price Austin, $585,000, down 2% MOM. Mortgage delinquency rate, 2.4%. Luxury homes inventory, up 18% in Dallas-Fort Worth. Construction permits, 112,000, up 8%. Homes under $300,000, 29% of total sales. These are the signals the market whispers. If you listen closely, they reveal patterns, opportunities, and risks. So the next time you see a Texas for sale sign, remember it's not just a property, but a reflection of economic flows, psychological currents, and invisible forces shaping decisions that subscribers tend to notice earlier than most. Long before they become obvious. Sometimes only when it's already too late. Stay subscribed.